Fresh government forecasts have slashed $10 billion off federal deficits for the next 4 years, including $5.8 billion in the current financial year. Higher company tax returns and better than expected superannuation tax receipts will more than offset a downgrade in expected slower wages growth and lower than previously expected economic growth. Treasurer Scott Morrison said the improvement was so big that from next financial year the government would no longer need to borrow to fund the day-to-day business of government. Key measures in the mid-year budget update include longer waiting times before newly arrived migrants can access payments, including paid parental leave and family tax benefits. From July 2018, the 2-year waiting period for these payments will be extended to 3. Though some exemptions will apply for vulnerable groups and New Zealand citizens living in Australia. These measures will save $1.2 billion. Savings from the university sector of $2.8 billion have been dumped after being blocked by the Senate. Instead, a series of measures including a freeze on Commonwealth grants payments to universities will deliver a net saving $2.1 billion. And $400 million will be saved over 4 years by withholding family tax benefit lump sum payments in order to collect outstanding Social Security debts. Wages are forecast to grow by just 2.25% this year, down from the 2.5% forecast in May, and by 2.75% in 2018-19, rather than 3%. Offsetting this, the government is expecting larger than expected employment growth, with the unemployment rate expected to be 5.5% this financial year, followed by near full employment of 5.25% in the next year. The economic growth forecast has been shaved by 0.25%, down from 2.75% to 2.5%. Consumer spending is also likely to be lower at 2.5%, rather than 2.75%. The update says there is a risk that subdued income growth could result in even lower consumer spending. A change in household attitudes towards saving could also lead to spending being weaker, too. However, the government has upgraded its forecast for business investment and expects mining investment to fall by 8% this year, not 12%. Non-mining investment is expected to climb by 5%, not 4.5%. Global growth forecasts have been upgraded to 3.5% in 2017 and 2018, with Treasury suggesting the global economic recovery is becoming increasingly broad-based. In the United States, unemployment has fallen to 17-year lows. China's growth will moderate from 6.75% to 6% by 2019. India's economic growth is expected to overtake China's and reach 7.75% in the same period. Iron ore is forecast to remain at $55 a ton, unchanged from the budget, indicating forecasters believe prices will moderate in 2018 despite recent rises.